What's up everybody? Welcome to the Stocks channel. My name is Corey and today was the first trading day of 2022 and it was a bullish day across the board. Pay attention to which stocks and sectors are doing the best because the January effect is always a good indication of which sectors are more than likely going to outperform. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did have a bullish day going up 0.58% and we're bumping back up against that resistance level at 478. Remember, we're forming somewhat of a bull flag here, and as long as SPY is staying above this breakout level right around 472.5, we're more than likely going to continue to see higher prices. I say that because we have the bull trend across the board and we can see it's a very strong bull trend, and we know bull trends will push price action higher. So we want to continue to expect higher prices as long as we have the strong bull trend, and the price action trigger will be the breakout back above 478. We're going to have resistance right around 481 and a price target at 483, and yes, we can continue to go higher than that, but those will be the next price targets. As long as we're staying above these critical support levels right around 472 and the 20 simple moving average right around 469, we're more than likely going to continue to trend higher. You can see we're finally seeing a little bit of increase in volume today, so if we start to see high volume buying, we're more than likely going to get a full-blown short squeeze, and we are going to see that next leg higher. So at this point, it looks like we should break out and we should start closing back above 478, but only the price action can confirm that for sure, so continue to watch that critical resistance level breakout. On the NASDAQ 100 triple Qs, we also had a very bullish day today going up 0.96%, and we can also see we did go up on increasing volume today. We're back above all the moving averages and we're back above that critical level at $400, and we're still looking like we're forming somewhat of a bull flag here. Now the critical support levels on the triple Qs will be at 400, this newfound support at the gap close which is right around 397, and then our 20 simple moving average is right around 395. We could still go lower than that and hold on to the bull trend, and we could see a quick test of about 392, but I don't expect to see the triple Qs going that low. So as long as the triple Qs are staying above about 395, it looks more than likely like we're getting ready for that next leg higher, and the next bullish breakout will be on a close above triple Qs levels of about 404. We should have a minor resistance right around 405, and above that we should see the brand new all-time highs very quickly with price targets at 410 and 415. Remember, we have the strong bull trend, so there's no reason to believe the triple Qs are not about to form a new all-time high. We have new all-time highs on SPY and the Dow Jones, so there's no reason to believe the triple Qs aren't just lagging behind. On the Dow Jones, you could see that we closed at a brand new all-time high today, going up 0.65% and closing back above 365. So this is definitely a price action breakout, which means we're more than likely going to see the Dow Jones continue to trend higher with our next price targets at 368 and then 372. We have the strong bull trend, and remember the Dow Jones has been going much of basically nowhere last year, so this breakout could start to get very impulsive if it's going to be the real deal breakout. So look for those price targets with the critical support levels at 365 and then down here at the breakout level right around 361. 20 simple moving average critical support is right around 359. So as long as we're staying above that level and we have the bull trend, continue to expect to see brand new all-time highs in the Dow Jones. In the Russell 2000, we were up 1.29% today, and we see the Russell 2000 finding resistance exactly where we would expect, right around 226.7. We didn't close above that level, but we did close back above the 50 EMA, and this is the second day that we did close above that level because we also closed back above the 50 EMA on December 27th. We're going up on increasing volume, and we're definitely seeing the January effect in the small caps. The next most logical price action breakout will be back above about 227 to fully close the gap, which is just above 228. And then the strongest test of resistance is going to be right around 231 and 234. If at any point the Russell 2000 breaks back above 234, it's going to be looking extremely bullish, and we should see brand new all-time highs. But right now, this is just a counter trend rally, and we're still looking for a rejection at resistance and a possible next leg lower. So watch that critical resistance level at 228 and 231. You can see that we are starting to develop a bull trend, but we still have plenty of time that needs to pass to see the official crossover from these moving averages. So right now, don't get overly bullish, even though you can trade off support and sell at resistance, but don't expect to see new all-time highs until we get that confirmation breakout. To the downside, look for support right around 223.7 and the 20 simple moving average at 220. On the Arkk ETF, we were up 2.54% today, and we did close back above 3 of the 4 moving averages with the price action. We could be seeing the January effect in the small caps, and that could benefit the Arkk ETF. So continue to watch the price action because Arkk will be looking bullish on a break back above 99. The price target will be up here right around 103 to 104, and we still have resistance above that at 107 and 109. So on a break back above 99, Arkk will be looking a lot more bullish, and on a break down below 94 or 90, we'll be looking a lot more bearish, and we could be going back down to about 85 to 81. But right now, it looks like the price action is starting to look more and more bullish, and we are currently holding up above the support level right around 94.5. On the VIX, we were down just about 3.5% today, and we see the VIX starting to trend down towards that support level at 16. Below 16, we could still trend lower towards the support at 15, but you can clearly see the VIX is getting crushed, and a lot of fear is leaving this market. When fear leaves the market, we're more than likely going to start seeing a greedy market, which means we're more than likely going to see new all-time highs. Eventually, if the greed gets overdone and the VIX gets down to 15, we could see another spike in volatility, but we'll cross that bridge when the time comes. If at any point the VIX starts getting back above 20, be a lot more cautious because we could be seeing a volatile pullback. On Bitcoin, we're currently trading at that critical support level at 46,000, and we're starting to get a lot of tests of this critical support. Remember, I told you I saw increased volume buying off for that support level, and I was starting to get bullish, but ever since then, we definitely saw volume dying off, and we're no longer seeing high volume buying. This is not a bullish indication when we don't see bulls buying the dip at support. So if we lose this support level, we're more than likely coming down to the next leg lower, which is just above 40,000. Below 40,000, we could be going back down to 30,000. So be getting a lot more cautious if Bitcoin starts breaking down below 46,000. If at any point we start to see high volume buying off of this support level, that will be bullish and we'll have strong resistance right around 51,000 and just above 52,000. If Bitcoin starts breaking above 53,000, we can get a lot more bullish, and the next bullish breakout above 53,000 will be a close back above 60,000. On Amazon stock, we were up about 2.21% today, and we see Amazon back above that critical resistance level just above 33.90. You can see that we still have the full bear trend, and we still have a lower high and possibly forming a lower low soon, so you really can't get bullish until Amazon can at least break out back above about 34.40. Above 34.40, we still have resistance at 34.65 and 35.25. Above 35.25, we should get the bull trend, and we should be looking a lot more bullish. So right now, watch support on Amazon right around 33.93, and below that, we still have a higher low of support right around 33.34. Below that, you're looking for 33.11, 32.44, and then 31.85, and it is still possible we are trending lower as long as we have this bear trend. On Tesla stock, we had a very bullish day, going up a whopping 13.53% today on a gap up and run. We're very close to closing that gap above at 1208, and that should be a strong resistance level. If at any point Tesla breaks through that resistance, you're looking for the next resistance at 1240, and above 1240, you're looking at brand new all-time highs with a price target of 1412. You can clearly see we went up on increasing volume today on very impulsive bullish price action, so there's no reason to believe that Tesla is not going to attempt to break out of the previous all-time high, so it is possible we see Tesla trading at 1240 in the very near future. Again, if we break out above that, it's looking very bullish and we could start to run to 1400. Now, we do have a huge gap to fill below, and we do have a support trendline breakout, which we can still test. So it's still completely possible that Tesla does dip back down to 1100 before we see a new all-time high. That full gap close will be right around 1080, and below that we still have strong support right around 1020. So the Tesla bulls are in full control with the full bull trend and very bullish price action. So there's no reason to try to short this stock because it's likely trying to go much higher. On Apple stock, we did break out and close at a brand new all-time high today, with Apple going up 2.5% and closing at $182. At this point, it looks like Apple is breaking out and trying to get to my price target at 188, and we still do have the strong bull trend, and we're still well above critical support. The strongest support level on Apple will now be at 176, and if we break below 176 at any point, we're more than likely done and we saw the top, and we could be coming all the way back down to the mid 160s. But right now, Apple is looking very bullish, so there's no reason to think it can't go higher, so continue to watch for that upside price target at 188. Downside support levels will be at 179.5 and 176, so watch those levels closely. The financial sector was up 1.23% today, and we are starting to see the financial sector trying to break out, and we still do have a gap to close above. We're very close to having the full bull trend, so we could be seeing a very bullish financial sector in the year 2022. The industrial sector took a day to cool off today, going down 0.82%, but we still have the bull trend and we still have the bullish breakout look, so we could just be retesting the breakout before the next leg higher. The healthcare sector was cooling down today, going down just over 1%, but we still have the bull trend and we still have bullish price action. If we continue to go lower than this, we could lose the bull trend and we could go through a little bit of a correction, which would not be surprising considering the healthcare sector has been very strong in recent months. The energy sector did get a bullish breakout today, going up over 3% and breaking out of our resistance trend line, so we could be starting to see another bull cycle in the energy sector, breaking out above resistance and possibly going to a new daily high. So jumping back over the S&P 500, you can definitely see this was a very strong start for the year 2022. We saw a lot of sectors with a lot of bullish price action and a lot of bullish breakouts, and we are starting to see the January effect in a lot of those stocks and sectors that were beat up last year. So don't rule out the possibility that last year's losers will be this year's winners, and continue to watch the price action. If you do your research and you do your due diligence early in the year and you make a solid trading plan, you are setting yourself up for a much better chance to be successful and to remain profitable. If you're just sitting back trying to do the same things that worked in 2021 or doing the same things that didn't work in 2021, then you didn't learn from your mistakes last year and you're going to repeat the same exact mistakes this year. Take this time to get serious about your trading and understand exactly what you want to do this year to crush this market. Currently, Bank Trade Alerts is up over 15.8% in the last 3 months, and Bank Trade Alerts is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message. It only trades the ETF TQQQ, and now is the best time to be a bank member to start out the year 2022. You can find out all of the details about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade, and I'm bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.